Hello everyone. In this video, we are going to talk about one of the most complicated indicators, on the same hand, one of the most useful indicators of all time. It is a Japanese indicator called Ichimoku Cloud. As the name suggests, it's a Japanese indicator, right? So, in this indicator, we are going to see how it works. It is pretty much similar to the concept of moving averages and MACD. So let's see how it works and how it can be of any use to us. So first of all, if you want to add the indicator, as always, we go to this top indicators and strategy bar, and here I type Ichimoku Cloud, and it's a built-in indicator. So here we have our Ichimoku Cloud. It's a very complicated looking, but trust me, it is one of the most simple indicators. Complicated is in the sense that it looks complicated, and also the settings are a bit difficult to use. So first of all, we are going to see how the settings work, right? So in inputs, we can see that conversion line periods is default set to 9 and baseline periods is default set to 26. That means that this is a moving average of 9 candles and this will be a moving average of 26 candles. The best thing about Ichimoku is that you can relate it with MACD, because in MACD we use the same parameters, which is 9 and 26, right? So 9 is the faster one, 26 is the slower one. And if you are trading in forex markets or markets which open 24 hours, right? So what you can do for those markets, you can double these. If it's 9, you should take it to 20. If it's 26, you can take it to 60. If it's 52, you can take it to 120, and this is 26, so you can take it to 60. So this will change considerably. Use this setting only if you are trading the 24-hour market, like the international forex markets, right? So I'm going to set this as defaults, which is our default setting for stock market. It comes by default for the stock market like this only, right? So in style, we can see that there are these 5 and 6 terminologies which have been used. So we have a blue line in this somewhere. It is called a conversion line, right? Conversion line, its Chinese name is Tenakan Sen. Sorry, not Chinese, its Japanese name is Tenakan Sen, right? Then we have a red line, which is a baseline. I'm going to thick them so we can see them easily. Red line is known as Kaijun Sen. We have a lagging span. The lagging span is known as Chikou Sen. And then we have these two lines of the cloud. I think I can just darken them and even the plot as well, right? Oops. I think, yeah. So we have it. Now, this is what an Ichimoku cloud looks like. Now, let's jump to the basics of Ichimoku cloud, right? This is your conversion line and this is your baseline, red line. This is a lagging span, and the first thing you're going to do is remove this green line because it's not of much use. It might and might not show you supports and resistances. It's a bit unreliable because you can see that price action is not respecting this line much at any place, right? So first of all, what you're going to do is you're going to remove this lagging span, and now you are left with these three lines. So we have a blue line, we have a red line. Red line is baseline, also known as Kaijun Sen. Blue line is conversion line, also known as Tenakan Sen, and we have this cloud, right? So now first thing, the Ichimoku cloud is used as to check the momentum and the trend of the market. So the first thing you're going to see is if your price action is above the cloud. This is your cloud, right? The red cloud and the green cloud. This is your cloud. If the price action is above the cloud, that means we are in an uptrend. So it broke right through here. Uptrend started until this point, and then here it broke down, and then the downtrend started, and then downtrend went all the way till here, and then it broke up, then an uptrend, then broke down, a downtrend, and you can see that this downtrend, it existed for such a long time on 15-minute time frame, and then it broke above, and then another uptrend, right? So this is how you check the downtrend and the uptrend, right? Now this is one of the measure to check the trend. The second measure which will confirm your stance is that when the price action breaks this cloud line, right? Both of your lines, this Kaijun Sen and Tenakan Sen, should be below the cloud to reaffirm that you are in a downtrend. Similarly, if your price action broke through upwards, right? If you see that the price action was here at this particular time, I'll just take this example. I'll draw a vertical line here, right? If you see at this particular point, blue line is below the cloud and red line is below the cloud as well, right? Only after at this point that the red cloud crossed, the red line crossed above the red cloud and the blue line crossed above the red cloud. So once the price action is somewhere about here, only then you can be assured that okay, now this is going to be an uptrend. Otherwise you cannot be assured of an uptrend. Like you can see the case here that the prices, the conversion line and the base line didn't pretty much break the cloud, and hence this is indecision. If you are in the cloud, you cannot say that you are bullish or you are bearish. It is very indecisive, right? So the two measures to check is your price action first of all breaking, and then these two, conversion and baseline, also following. That will give the strength to your trend, right? Also what gives the strength to a trend is that the color of the cloud. I'll just show you the most recent example how the cloud works. Cloud is always like this. You will always have a cloud which will be available for a future prediction for you, right? Now why these clouds are like this? It's only because the Japanese had a theory that the past price is a good indication of a future price, right? They used to believe that the past price history is a good indication for the future price history. So if this cloud is green, right, and we are above the cloud here, that means that this is giving the strength to my trend, and this means that we can very well see this trend continuing, the cloud going like this, and our trend continuing bullish towards 32,500, 32,600. Similarly, if you see that when the price was at this point, this cloud started turning red, right? Because you can see that price action is here, but the cloud information is available to you well in advance. So if the price action is here and the cloud started turning red, that means that our trend is losing its momentum and it started turning bearish, as you can simply see here. Similarly, in the past instances, you can see here that when the price action was here, the cloud must have been somewhere around here and it started turning green. So by the time I'm here and I see a green cloud somewhere around this point, so I'll see that okay, now my trend is having some strength because the cloud has turned green, and you can see that the trend, it went upwards only, right? So that is how you can check the trend. It's pretty much very easy. Now another application or a use of Ichimoku Cloud, these lines, blue and red lines, they are used as supports and resistances for a good use. If I show you this, right? Okay. So now you can see that this blue line here is acting as a support, all the way support, and it is supporting the price action until unless it broke down, right? And then it broke down, then it is acting as a resistance here, right? It is not letting it pass through. How do we know if it's a good resistance or a good support? You can simply see by the fact that in order to break a resistance, the price action shows a reaction move. It's a good reaction. Like once it broke above these two lines, it showed a reaction, right? So that's how you know with a good reaction that it was a good resistance or a good support, right? So now how to use the clouds and these lines as a buy and a sell signal? That's one of the most important questions, right? So according to the textbooks, you should have two conditions in order for a buy and a sell signal, right? So first of all, if your price action is above the cloud, right? Your price action is above the cloud and the blue line overtakes the red line, the conversion line overtakes the baseline, or the Tenakan seine overtakes the Kaizen seine. All three are the same thing. You can use your terminology accordingly, right? That will produce a buy signal for you. So let's just find a buy signal for you. All right, you can see at this point, this particular point, that price action is above the cloud and the blue line overtook the red line, the conversion line overtook the baseline, and hence it produced a buy signal and the price action surged upwards, right? This is not a made up thing. This is the textbook rule of Ichimoku Cloud, and how to use Ichimoku Cloud is that the conversion line should overtake, or the crossover as we call it in moving averages, should be crossing the red line and the price action is above the cloud. That will produce you a buy signal. Similarly, if the price action is below the cloud and the blue line falls below the red line, that will produce a sell signal. I'm going to find a buy and a sell signal for you, just to show. These signals, they don't come very often in Ichimoku, so you have to find them, right? Also, there might be a question from some people that what if we don't use cloud and we only use the lines, like this is crossing below, right? So this might signal a downtrend. This might signal a downtrend, but it's not a confirmation. In order for your trade to happen, you need confirmations, right? So that's why I'm telling you the two parameters or two criterias to open a trade, just because that it will carry more confirmation rather than one, right? you can see that only looking at this, the fact that we do not have plenty of bearish signals, just because Bank Nifty has been so bullish in the past month or so. You can see that we do not have like plenty of sell signals in here. That's the fact. Here it can be a buy signal for you. Lines overtaking above the cloud. Price surged upwards. Right. And if you see that there is a bearish crossover above the cloud, that means that you should not be pursuing a bullish trade. That's as simple as that. Right. So let's just try to find out some illustration and some other stock. Say Reliance. Okay, you have a clear buy signal here. Price action above the cloud, and you have a crossover, and Reliance surged from 1575 1576 levels to 1615 level. That's a solid 3% or like 3.5% trade, which if traded in options might give you like 2 times or 3 times return. Here you can see, here is a more clearer version of this. This still you can say that not clear, but here you can see it's clear, and the price action surged upwards. Right. We do not have plenty of bearish crossovers because market has not been bearish in past like quite a while, I think. Also, another important fact, that the thickness of the cloud, right? If your cloud is thick, that will give a strength to your trend. If the cloud is thin, that means your trend is getting weaker, and if your cloud is getting thick, that means your trend is gaining some strength. You can see that once it broke through the cloud down here, the cloud started getting thicker. You can see that the cloud at this point was so thick that once you were here, you can almost see that okay, the cloud is so thick that we are for sure going to fall further much, right? So also this fact that the cloud, it gives strength to your trend. You can see that the thickness of the cloud here, and hence the strength in here. Once the cloud started getting thin, there was some like indecision in the market here, but once again it turned green and then market surged upwards, right? So this is it for the Ichimoku Cloud video, and hope you learned something new in this. If you have any questions, as always, ask me and I'll solve them in a separate video for you. Alright, then that's it for this video. Until then, I'll see you.